Hi everybody, Chris Wittich here, partner with Boyum Barenscheer, and I wanted to make a video and sort of talk about the EIDL loans. I know a lot of people may have considered applying or they did apply and they got an EIDL loan maybe back in like March, April, even into May and June before some of them got processed. And want to be sure that people really understand what it is those EIDL loans are all about and what they've gotten themselves into. And so we want to go over a few of the basics and really, I mean, the one thing to take away is that I strongly encourage you to actually sit down and read the loan. I know that sounds silly, but read the entirety of the loan document. I think it's really, really important. So just on a big picture, these EIDL loans are economic injury disaster loans. They've been around for a long time, but COVID was sort of a nationwide disaster. So all of a sudden, people qualified all across the country that usually have never had one of these EIDL loans before. And I mean, knock on wood, hopefully you'll never have one again. So in a big picture, when COVID first hit, they said, all right, COVID counts as a disaster. You can apply for these EIDL loans. Some people got those loans right away and they were in various amounts. And then pretty quickly they ran out of money, or they figured out they were going to run out of money. So they started limiting these to 150,000. So I know we have some clients that got more than that because they really got in it early, but then a lot of people have been limited to that 150,000 maximum. So for a lot of you, it's the $150,000 EIDL loan you got sometime in the spring. I know processing these loans was quite tedious and a slow process through the SBA. So it might have been into May or June even before you actually received the money. So big picture, you got this $150,000 loan. It is a long-term loan. So the terms are 30 years to repay it and 3.75% interest. That's a pretty good interest rate, and those are pretty favorable terms. And I think a lot of people just sort of stopped there and said, great, the SBA gave me a loan. It's 30 years. I have a long time to pay this back. That's super. And they maybe didn't dive into all of the paperwork and really understand what they were signing as much as perhaps they could have. So want to highlight some of the other things in there that go beyond just you have 30 years to pay it back, which is nice. Everybody understands that aspect of it. So one of the phrases that I've used a lot with clients the last few months is that this is a disaster loan. It is not an expansion loan. So one of the restrictions is that you can't move your location, you can't expand your business. The point is really is a disaster loan. It's to help get you through the COVID, but it's not really designed for, and you're not allowed to use it for expanding your business. So there are different loans for that. There are different avenues to access capital to do those kinds of things. An EIDL loan is a disaster loan. It is not an expansion loan. So beyond that, when you start to get into some of the specific terms, again, I want to really encourage you to read the loan. So I have one that I've been reading through from a client. It was 24 pages long. Realistically, there's only maybe 5 or 10 that have the real terms of the loan in it. So it's not some oppressive 200-page document you got to read through. Most of it is fairly understandable, but I really encourage you to read through it, because when you do read through it, you're going to find some of these kinds of terms. And so I want to just go through a few that are standard language and should be in your EIDL loan. So the borrower, that's you, the business owner, you are supposed to retain and be able to itemize the receipts to show how you spent the money. The borrower is not to use for the expansion or relocation of the business, as we talked about. The borrower needs to inform the SBA if you have insurance claims that did cover this. And so if you receive insurance proceeds for this same disaster, or you receive money from other government programs, you're supposed to tell the SBA about that. And the borrower needs to keep financial records for 5 years. So 5 years of financial records you need to keep throughout the period of time when you have this EIDL loan. So even through either the maturity of the loan or when you choose to pay it back early, for 3 years after that, you still need to have your 5 years of business records. So, I mean, that's a fairly standard thing. Hopefully you're doing that anyways. The SBA can request those financial records at any point in time. And then we get into some of the limitations that you've agreed to as part of the EIDL loans. So the one limitation in particular, I want to read it word for word because I really feel it is that important. So it'll be in a section called Limitations on Distributions of Assets. Borrower will not, without prior consent of the SBA, make any distribution of borrower's assets or give any preferential treatment, make any advance directly or indirectly by way of a loan, gift, bonus, or otherwise to any owner or partner or any of its employees, or to any company directly or indirectly controlling or affiliated with or controlled by the borrower or any other company. So the last part of that gets a little long and nebulous, but I mean, big picture here, the limitation that you've agreed to is that there will be no distributions, no special bonuses given to owners or employees, because if it's a disaster situation and you needed the money for the disaster loan, it really doesn't make sense that then the owners are taking like $100,000 of distributions from the business. You could have sort of used that money instead of using the SBA's EIDL loan. So that's sort of the thought process. And I mean, that one in particular, no bonuses, no distributions to owners or employees, that's a key one to understand and a key one to really focus on, because I think a lot of people maybe just are not aware of that. And so as you're considering, if you're looking at it like, well, we got the EIDL loan, things were very uncertain in March and April when we did it, and now it's September actually, and things are better and we're back on our feet. You might want to repay that EIDL loan, and that would sort of free you from the limitations that you've agreed to. Because if the SBA finds that you've sort of broken any of the rules, they can hold the loan in default, which means the entire loan is due back to the SBA. So once again, you really, really need to sit down and read through the loan agreements. And if you have any questions about sort of what you're doing or if that qualifies, then please certainly reach out to us, contact us, and we can help with that. But I know PPP was very, very time sensitive, and so we've helped a lot of people with that. The EIDL is a 30-year loan. Spending the money isn't super time sensitive, and I know a lot of people have taken it, but they really haven't even spent it yet, which is fine. So really want to just circle back and make sure you understand what you've agreed to with those EIDL loans. So really, once again, main point here, just encouraging you really got to read the loan for the EIDL, read the loan document, read the note agreement, and see what it is that you've agreed to, because it really is critical, and you want to consider that as you're looking towards doing tax planning at year end, which often involves making distributions so that people can pay their taxes. So really a great time to look at it as we get into the fall here and start working on that tax planning. And once again, if you have any questions, by all means, reach out to us. We'd love to help. Thanks.